Hi, I'm Kelly. I'm with Unity Catholic Federal Credit Union, and today we're going to be talking about the wise use of your credit. So, there are some documents that are available on our website, and it's at unitycatholiccu.org. So, let's go through those. Okay, so as we go through, I'll be referencing different handouts that are available. So this first one we've got is the Know What You Owe. It gives you the opportunity to see where your debt is, how much your interest rate is, how much your monthly payment is, so that you can compare or look at all of your debt in one place. It's really helpful in consolidation or finding better interest rates or, tackling paying down your debt. So this next one is if you need to compare credit card offers or loan offers so that you can make the best choice for you and your family. It just gives you the opportunity to put all the good information side by side, and so that you can compare and make a great choice. Okay, this next one is the sample dispute letter. Now, if you have credit or a record on your credit bureau that is not correct, you can dispute that. And this is kind of an outline. You can also dispute it on your electronically, but this just kind of gives you an idea of the information that you would want. And then another sample letter to close your accounts. So maybe you have a card out there that you're no longer using, you want to be able to close that, and you want to be able to mark your account on your credit report so that it says that it was closed by you, closed by the consumer. And then we're also going to reference just a sample credit bureau report. This tells you where the different things are. And maybe you've never looked at a credit report, so it kind of has the tags on here so that you can look at yours and figure out what's going on. All right, so we're going to go ahead and get started. Our seminar is called Take Charge, Wise Use of Credit. And the things that we're going to talk about, here, let me get this so that it's like that. Perfect. Okay, we're going to talk about kind of the benefits and costs of using credit cards, how to build a good credit history, warning signs that you have too much credit, how to figure out what's a good credit limit for you, the amount that you shouldn't spend over, how to read your credit report, and how to cancel your unused cards. We already talked about that a little bit. So credit cards. The average consumer has over $6,000 in credit card debt. 60% of users keep a balance on their credit card. And 57% of our college students have credit card debt, or have a credit card, I should say. So it's super important that we manage our credit well, because we don't want to end up in the statistic of bankruptcies, because that is a lasting long-term effect that you want to avoid at all costs. Okay, so why should you care? Your ability to get credit is based on how you've paid credit in the past. Your credit report is like a report card of what you've done in the past. So your payment history, paying things on time, paying at least the minimum payment is 35% of your credit score. So it's the largest chunk. One missed payment, one late payment can drop your credit score by 100 points. So making sure that you know when your obligations are due and not relying on a grace period, because then if you always pay within the grace period, which is great, you don't get a fee, but you can be reported as a slow pay. And we want, when a lender is making a decision to give you that opportunity to borrow funds, you want them to see that you've done a good job in the past, not that you're a slow pay. So pay on time, every time. Okay, so the convenience of credit cards is pretty easy to see. You can buy now, pay later. Credit cards are accepted everywhere, basically. It also gives you the opportunity to carry less cash, especially in today's pandemic world, where some places aren't even accepting cash. So having some kind of credit card or a debit card to use instead of cash is almost a necessity today. If you manage your cards well, a lot of them offer rewards programs, so that can be a benefit. You don't have to get out your ID as well as the card. Many times it's just, swipe your card and you're out the door. You get a monthly statement of your purchases, so you can see exactly where your money's going. And if you pay it back in full every month, it's an interest-free loan. So that can really, be beneficial if maybe you only get paid once a month. That can be hard to manage. So having the flexibility of having access to cash and then being able to pay that back when you get paid is, something that a lot of people do. A lot of people might use their credit card exclusively, knowing that they're earning rewards and they're going to pay it back at the end of the month. Fraud protection as well. So we'll talk a little bit more about fraud protection as we go forward. Now, the disadvantages can sometimes be harder to see. They're very expensive. Many of our store credit cards carry out an extraordinarily high interest rate. I don't know anybody who doesn't have a Kohl's card, but Kohl's charges 28% interest. If you just take advantage of the offer that comes in the mail and you didn't read the fine print on the back of when, that intro rate is only available for a short period of time, and you carry a balance, that can, be 18, 20, 25%. So you want to be cautious of the cards that you do accept in carrying a balance. Sometimes it's too easy to use your credit card because you can impulse buy, which, causes you to overspend. So, being able to say, what, I'm going to look around, I'm going to, compare prices, I'm going to look at reviews, I'm going to do that kind of thing instead of just purchasing right now, can be really, beneficial to do that as a good consumer. If you do carry a balance, don't pay your balance off every month. The item that you purchased might be worn out, doesn't fit by the time you're actually paying that off. And sometimes we can justify our purchases because we're going to earn a reward. The reward does not outlive the benefit, what you're paying extra for it. Okay, so credit cards. The things that affect us are the interest rate, Maybe you have an annual fee. Many cards don't have one, but maybe you have one. If you go over your limit, there's a fee for that. There may be a balance transfer fee. Cash advances are calculated differently than normal everyday purchases. If you lose your card, there's a fee for that. There's a fee if you make a late payment, and a travel penalty. So maybe you purchased something on your credit card and you didn't get to use it. There's not always travel protection. So you may just lose that money. Shameless plug, Unity Catholic has a great credit card. Our everyday rate is 9.99. There's no annual fee. There's no over limit fee. There's no balance transfer fee. Cash advances are calculated differently. We do have a late payment fee, and we offer travel protection. So all good things to look for when you're shopping for the right credit card for you. So maybe your due date is not convenient when your paycheck comes in. You can always ask your issuer, people you borrowed money from, to change your payment date. Some places can do that, some places can't. But it never hurts to ask, in my opinion. So you want to pay, like I said before, you want to pay on time every time. If you need to use the grace period, do that, but really try to turn your budget around so that you can meet that payment due date. Some fast ways to pay, instead of like pop in a check in the mail, is use your online bill pay. That usually gets there the next day. You can pay online at the creditor's website. So that is very helpful. If you're like right on the day, go to their site and pay that so that you don't incur any additional fees. And then if maybe you've never had a late fee before, you were on vacation, you forgot to schedule your payment, you got a late fee. Call your creditor and ask if they can waive that fee. Like I said, never hurts to ask. The worst they can say is no. So if you've always paid on time, this is an exception to the rule, take a chance, ask them. A lot of times they'll waive that, like a one-time courtesy. All right, things to watch out for when you take a credit card offer. When you need to pay attention to the fine print, not just when you are looking at the offer, but any updates that happen, or a penalty rate that might go into effect if you don't pay on time or you go over your limit. So the shrinking grace period, maybe when you signed up for the card, it was 25 days. But a year into it, they changed their terms, but you don't pay attention to that, and now your grace period is only 18 days. That's a whole week. That can really throw off your, interest charges. And it's a much shorter period of time. So you want to pay attention to that fine print that comes in the mail, or that maybe pops up when you log into the site. Don't just dismiss, pay attention to it, because the fine print defines your offer, defines your credit. So maybe if you pay late, they can increase the rate. If you always pay in full, maybe they pay a fee, because that's how they make money, is when you carry a balance. So if you pay it off every month, they're not making a whole lot of money. And they may charge you a fee. Maybe some cards have an annual minimum that you have to charge. These kind of things are not beneficial to you, the consumer. They're beneficial to the lender. So you need to know who you're borrowing money from and what the rules are so that you can follow them. And balance transfers often kind of go to the end and you pay off the lowest interest rate first. But credit union, we pay off the current offer first and push all new offers to the back, so it benefits you, the consumer. If you're only paying the minimum payment, you know, lenders can decide how much your minimum payment is. It's usually a percentage. And if you only pay the minimum payment, let's say you have, you know, a $3,000 balance and they say that your minimum payment is $30, it's going to take you 15 years to pay that back. So it's important to look at the box that's on your statement, and it'll give you an example. If I only pay the minimum payment, it's going to take me, you know, 15 years to pay that back. If I pay an extra $20, then maybe that takes my time that I'm going to have to pay for that down to 10 years, whatever the example is. But they have to give you an example. That's a consumer law that was enacted several years ago. And then that 90 days, same as cash. I know that most of us have probably taken advantage of some kind of 0% offer. And then they offer you a minimum payment. Now, if you only make that minimum payment, you're going to get, it's not going to be paid off by the time that your offer ends. So you're going to have back interest. So if I borrow on October 1st with 90 days, same as cash, $1,000, and I only pay, you know, $100 a month, because that's what my minimum is, that's going to only pay it down to $700. But I'm still accruing interest on the original purchase of $1,000. So at the end of the term, unless I can come up with $700 all in one fell swoop before the end of the offer, they're going to backdate the interest charges at their default rate, which is usually very high, and you're going to get an extra interest charge. So if you do take advantage of a, you know, short-term offer like that, divide what you owe by the period and then make that your minimum payment. Not what they say you have to pay, but what you know you have to pay to get that paid off in the time frame. Always a good thing to do. So this is that example that I said that often is on your credit statement from your lender. So if we look at the amount owed, $2,000 at 18% interest and 4% of your payment, that's your minimum payment, you're going to pay that off in 9.5 years. Obviously, it's longer if you owe more. So $4,000, almost 12 years. But look at the interest costs. You needed to buy, you know, your car needed work. It was $2,000. You're going to end up paying over $3,000 for it. And it's going to, you probably won't even have that car anymore in 10 years when you actually pay that off. So, you know, think about what you're putting on your credit card. Think about how long it's going to take you to pay back. And will I have the benefit of this item when it's finally paid off? So some warning signs that you have too much credit, too much debt, I guess I should say instead, is that you're only making the minimum payments. You're not able to allocate any additional funds. You're at or near your credit card limits. So if you have a limit of $5,000 and you're at $4,800 every month and you pay it down, you borrow, pay it down, borrow, then you're always at that credit card limit. And that can mean that you're using your credit card to buy groceries, pay utilities, pay another card. So it's important to, you know, manage your credit well. You don't know what you owe. Sometimes we can lie to ourselves. So that first handout where it listed all of our debts and how much we're paying and how much we owe. Can be really beneficial to kind of get a hold of your credit. Like I said before, cash advances that you're using to pay on other cards or make everyday spending things. You're getting calls from collection agencies, that's a big one. But let me just focus on that for a second. If you have too much debt and you're struggling to make your payments, call your creditor because they want to know what's going on. They don't want you to just disappear. Very often, they can come up with a plan that's going to fit you. Maybe you're lying about your spending. That can be another warning sign that you have too much debt. And more of your total income is going towards those debts. You don't have any additional cash to do something if you want to, or if a little emergency comes up. All signs that you have too much debt. So expensive credit. I like my little image here because it's a loan shark. And that's what payday loans are. They have, sometimes your interest rate, when you finally pay back that payday loan, can be 700-800%. So, you know, try not to take advantage of that. I know that emergencies happen. We don't know what to do, but call your credit union. A lot of times they have something short-term that you can take advantage of. Maybe at tax time, that refund anticipation loan sounds awesome because we can get our $1,000 today, but there's a cost for that. Sign up for direct deposit. It gets into your accounts really fast and it doesn't cost you anything. Rent to own. This is another really big expense. Now, it's okay to rent something every once in a while. Maybe you're having a big party at your house and you need to rent some chairs. Maybe you need to rent a big screen for the Super Bowl. Whatever the case might be, consider a rent to own place that it's just short term. This isn't something that you want to pay for until you own it, because that's going to be years and years. Pawn shops. If you need to, pawn something, that means that you are giving it to someone else. They're giving you considerably less than its retail value, and they're holding it. So it's like a loan, but if you don't pay it back on time, they're going to keep your item. Lots of people have lost things that were dear to them, trying to manage their budget. Car title loans. A few years ago, the Cleveland area had a bunch of these car title loan places pop up. I've seen so many have closed now. But that means that you have a car that you don't owe anything on, and people are lending you money based on that security. Your credit union can do that for a very low interest rate, but it just goes back to using a reliable source of lending, not something that's popped up and is going to charge you an excessive amount of interest. And debt consolidation. That can sound like an awesome idea, and for some it is, because you can consolidate all that debt into one loan, you make one easy payment, and that sounds like the dream. But if you're not controlling your spending, it can dig you in deeper. I've done this. I have dug myself in deeper. I'm now on a good path, but so by digging yourself in deeper, I mean that I consolidated all of our debts into one easy loan payment. But then something happened and I started using my credit cards again. I cannot be trusted. I am not good with credit. And I know that about myself. I think it's important to know where our weaknesses are. So building a good credit history. You hear people talk about, how important your credit history is, having a good score. But it's kind of like this mystery of how do you do that? How do I get credit? So pay your bills on time. We say that over and over again. important to establish credit in your own name. So if you're, you know, you have joint credit with your spouse, one of you is the co-borrower. So you, or maybe even just an authorized user. If that relationship should end or your spouse passes away, it can be hard for that surviving spouse or as a single person again to, you know, get credit because they never had anything in their own name. So establish credit in your own name. It will help you get the lowest interest rates possible when you do need to borrow. If you're just starting out, you can get a secured line of credit. That means that maybe you put $500 in a savings account and you borrow against that. And you want to make sure that you're doing this at an institution that will report that good payment history to the credit bureau. So important that places report the good credit. Limit your number of open lines of credit. You don't want to look like you have cards all over the city because it gives you an enormous ability to borrow. You want to mix your credit. You want to have maybe a credit card, a store card, a mortgage, an auto loan, an installment loan. All of those mixed together show that you're able to manage different kinds of credit. You want to use less than 25% of your credit card limit. So that means that if I have a $1,000 credit card limit, I should never spend more than $250. And you want to do that on every line of credit. You can't just have, you know, 2 cards with $1,000 and then rack it all up on one and then spread it out. You want to make sure that that credit, we call it the credit utilization rate, is down. That shows that you're able to manage that kind of debt and that you are able to make on-time payments. Those are all good things. So establishing credit in your own name can be difficult. I always say come to the credit union and, you know, get some kind of first-time loan, first-time credit card, even if it's a secured credit card. You're not going to pay a lot for it. We report to the credit bureau, and we don't view no credit as bad credit, where a lot of places do. If you've never borrowed before, you have no track record. And some places can view that as a bad thing, but we don't view it that way. We really try to help people start off on the right foot. But if you are out there trying to get credit, we recommend maybe a gas card. Pay that off every month. Pay off your bills on time. Pay off your student loans. Don't forget to make those payments. You can open a checking account, share draft in the credit union world, and don't bounce checks. Because if you go negative in your checking account, financial institutions can report that to your credit bureau, which would be, you know, a bad mark. You can use secured credit, like I said, if you can't get a regular one. And you can obtain a small credit, a small loan from your credit union or whatever financial institution that you're using and pay it back quickly. So things that you should think about before you use credit is have a plan for paying it back. Know, you know, what fits into your budget. I can't afford a payment of more than $50 a month, so I know that I can't spend more than this and be able to pay it back. Track your spending. A credit card's a great way to track your spending if you do it carefully. Live within your means. That means don't overextend yourself. Make smart choices. Have an emergency fund. Emergency funds are so hard to establish because, gosh, today everything's an emergency. But having some, even if it's a small safety net, will help you make better choices going forward. Pay all your bills on time. I think that's on every slide. And know how much of your spendable income is safe to spend on credit. So know what you can afford, know what you can pay back. So how much is safe to spend? There's a couple different calculations we can use. You can take your monthly take-home pay, that's your net, after taxes, after all deductions, and multiply that by 20%, and that will give you an amount that you shouldn't overspend, and you can pay back comfortably. The other calculation is to take your spendable income and divide by 3. So what is spendable income? That's your take-home pay minus your obligations. So mortgage or rent, utilities, food, clothing, all of our needs, things that we have to pay for. And so if I make, for ease sake, $1,000 a month, and all of my needs cost $700, that leaves me $300, and I divide that by 3. So it says that I can't spend more than $100 on credit cards. So if you're spending more than that, or more than what that calculation comes out to, that could be a warning sign that you should really take control of that. What's the best credit card? So it really depends on how you use credit. We had that side-by-side comparison. So those are good things to look at. And so when you're looking at getting a new card, but if you are a revolver says that they're going to carry a balance all the time. You want a card that's going to offer you a low interest rate. Sometimes you can pay an annual fee to get a lower interest rate. So if you're always carrying a balance, that annual fee doesn't matter as much as the low interest rate. If you're a partial revolver, that means sometimes you pay it off, sometimes you don't. You want to get a card with a low interest rate and maybe no annual fee, because you don't want to pay for something that you might only carry a balance 2 or 3 times a year. And then you've got your non-revolver. That's our convenience user. So they maybe they make all of their purchases on their credit card, and then they pay that off every month. So you want a card that has no annual fee. And the interest rate doesn't matter so much because you pay it off every month, so you're not going to incur any interest. And make sure that on that non-revolver, you know what the grace period is to pay that back before interest charges start accruing. Read the fine print of your credit card offers and understand those fees. It is our responsibility as consumers to know what the fine print is. I know that when you open an account, you're given like a book of fine print that is the most boring reading on earth, but it's important for you to know what you've gotten yourself into. Beware of low introductory rates. Know when those, go away and what's going to be the rate afterwards. Reward programs can be great. They can be really beneficial, but you want to make sure that you understand it again. And don't wait for offers to arrive in your mailbox. A lot of times these are higher interest offers, and they often offer a introductory rate. So go be proactive. Go shop for a great credit card that will help you achieve your goals. So things to help you avoid fraud. Most cards come with a PIN number. You want to make sure that you don't write that PIN number on something that's in your wallet, on the card. You'd be surprised at the things we hear. You want to keep that in a safe place at home, not on your person. Shred your receipts when you're done with them. So you want to keep your receipts until you review your credit card statement, and then you can get rid of them. Use your credit card online with well-known retailers, well-known sites that you have gone to yourself, not just something that has shown up in your email and then you click on the link. That can be very dangerous. You want to look for SSL on the site. That means it's a secure socket layer and that it is a safe place to use your credit card. You want to write down your credit card numbers and the phone number to call if your card should be compromised or you lost it. You want to keep that at home so that if your wallet gets stolen, that you have that information available in another site. You don't want to respond to telephone or online requests for personal information. Your lenders won't ask for this. We already have it. So when you provide that information online or over the phone, it's often to someone who is trying to take advantage of you, steal your money, use your credit, establish new credit in your name, and check your statements for accuracy. If something is wrong, report that. You have to report it in a timely manner. So maybe your card gets stolen. What do you have to do? So you need to report the loss as soon as you know about it. So you call immediately and your liability is zero, usually. Maybe your maximum liability is $50 per card, but a lot of places will waive that. You want to keep those, like I said before, keep your card numbers and phone numbers in a safe place, not in your wallet. So if your debit card gets stolen, if you report that immediately, there's usually no liability. Your maximum liability is $50 if you report it within 2 days of realizing that it's stolen. And you have up to 60 days to do that, but it kind of phases in. Your liability might go up to $500. But if you don't report it until 60 days after your statement has arrived, then you're responsible for that. We rely, your lender or your credit union, whoever you're borrowing money from, doesn't know sometimes that something isn't right. So we rely on you, the consumer, to review your statements, to look at online banking, to tell us when something is wrong. Excuse me. Thank you. Okay, so what's in your credit report? It has all of your personal information, social security number, date of birth, your address, a previous address, current employer, previous employers, and payment history, whether it's positive or negative. Positive information can stay on your report forever, but negative information lives there for a very long time. So if you file bankruptcy, you have a judgment, you have a lien, lawsuits, collection, all of those things stay on there. Bankruptcy can stay on there for 10 years. So from the time it's discharged. And then credit inquiries as well. So if you are applying for credit at a bunch of places, that's going to show on your credit report, and that can be negative to your score. So you want to think about the things that are negative on your report and why they're listed as negative. So if you have your credit report in front of you, usually your negative items are listed towards the top, so any collection items. The rest of your credit report has your payment history, and then you can refer to the sample that I provided, and then who asked about your credit history. So again, those are the 3 things that are really on your report, and things stay on there for a very long time. But who wants to see it, right? So you've asked for credit. Obviously, people are going to, who you're asking for credit are going to pull your report. But often landlords will pull it as well, insurance companies and potential employers. So if you do not have a good credit report, a good credit score, maybe you don't get the apartment that you wanted. Maybe your insurance rates are a little bit higher. And potential employers they often pull it as part of your background check. So you're giving them authorization to pull it. So if we've got 2 candidates for employment and they're the same, we like them the same, they're great people, they have the education that we're looking for, but we have to make a decision between these 2 people, and one has a good credit score and one has a bad credit score. 9 times out of 10, we're going to choose the one with a good one, because it shows that they're responsible, that they can, adhere to the rules, that they are able to manage their assets. And it also shows that they're a lower risk for theft in the workplace. Often we don't think about how our credit is going to affect our future opportunities, not related to borrowing money. So again, positive information stays on your credit report forever. Negative information can stay on there for 7 years from the day you take care of it. So if you have a collection, maybe you have a cell phone collection of $700 from 3 years ago, but you don't take care of it until today, okay? It can stay on there another 7 years from today. So now it's been on there for 10 years. Bankruptcies can remain 7 to 10 years. And there's nothing you can do about it. It's your credit report has what should be the truth of what happened in your credit. Good and bad, all there together. So you can get free credit reports. You want to go to annualcreditreport.com. You can also call for it, or you can send a mail request for it. You can get 1 report from each credit reporting agency. There's the big 3, Equifax, Experian, and TransUnion. And maybe you get them all at the same time. You review all your credit at one time. That's fine. But a lot of people might spread that out. So you can get a new credit report from a different reporting agency like every 3 months. And you can rotate, and that way you're always having access to your most recent credit. You could also get a free copy of your credit report if you've been denied credit in the last 60 days, you're a victim of identity theft, you're a welfare recipient, you're unemployed, and job hunting. So again, you want to see if there's bad stuff on your credit that might, limit your ability to get a job. And then residents of certain states are also eligible for that. Ohio's not one of them. So if your credit report has errors, you want to file a dispute and why you think that information is wrong. So if you paid a collection off, but it doesn't show that it's paid, then you want to get that showing what it actually is. Whoever reported that information has 30 days to respond to your dispute. If they respond, it will reflect with whatever they responded with. If they don't respond, then the credit reporting agency will remove that item. 9 times out of 10, they're going to respond. If you disagree with what they responded, maybe they didn't remove it from your credit report, or they say you didn't pay it, you can make a statement on your report so that will appear to people who pull it. These are the big three. There's some contact information for them. So there's a phone number that you can call to request your report, and then there's a fraud number, and then their website. So what's a good credit score? Most places will use the FICO score, and that ranges from 300 to 850. Most people fall somewhere in that fair to good range. And like if you're using Credit Karma, Credit Sesame, our Credit Sense program, it uses the Vantage score, and it gives you the same kind of information. The score is just a little different. Now, you can request your FICO score from the credit bureau, like when you order your report, but there's often a fee for that. The Vantage score is a great way to kind of get an estimate of what your actual FICO score is, and that's often free. So at Unity Catholic, through home banking, you can sign up for Credit Sense, and it gives you access to your credit report. It gives you access to a score. It gives you tips on how to pay down your debt, how to manage debt. So all great things in there. It's very similar to Credit Karma. This is what affects your credit score. So we've been talking a lot about payment history. That's 35%. It's the largest chunk. But your amounts owed, your credit utilization is 30%. So those are the big ones. New credit, length of credit, and your credit mix together add up to 35%. So those don't affect your credit as much as the other two do. So paying down your debt, you realize that, you know what, this is what I am going to do. I'm going to focus on it. It's going to be my plan. Some good ways to do that, excuse me, are to, again, list your debts so that you know what the interest rate is, you know what the payment is, you know what you actually owe, and choose one. You're always going to make minimum payments on everything, but maybe you've been trying to put an extra $10 on every debt. Instead of spreading it out over 3 or 4 cards and paying an extra $40 that way, you can take that $40 and apply it to one of them. So you're going to make your minimum payment on everything, and then you're going to put this extra amount on one of them. Now, some people might use the one that has the highest interest rate. Others might use the one that has the smallest balance because it'll go away the fastest. However you decide to tackle it is fine. Whatever makes you feel better. But the power play principle is that $40 So my minimum payment on all of my cards is $30. I'm going to take that, I'm going to pay $30 on all of my cards. That's the minimum. I'm going to take this extra $40 and apply it to the one that I've decided. Maybe it's the one with the highest interest rate until that one is paid off. Always going to pay that extra $40 on there. Anything extra that I've got, I'm going to put on that one. And when that one gets paid off, I've been paying $70 on that top one. When that one gets paid off, I'm going to then take that $70 payment and apply it to the next one. So 70 plus the 30, I'm going to now be paying $100 on that next card till it's paid off. Then I'm going to take that $100 and I'll apply it to the next one. And as we move through our plan, you're really going to see movement. I think that people get so disheartened when they're trying to pay down debt because it takes so long for it to move. But if you apply the principle of focusing on one debt and then not like erasing that debt, you pay it down, but that money that was allocated to it, you focus on another one, and that one's going to move so much faster. And before you know it, I'm working my five-year plan. So I'm 18 months into my 5-year plan. If you need help developing a plan, talk to your credit union. We've got great ideas. We talk to people all the time about how they can better manage their debt, what's better debt for them. And you want to manage paying down debt and saving for emergency fund, because I think that most people end up in debt because something happened. Something caused them an emergency or something came up and they needed to pay for it. They used their credit card for it, and then it's so easy to just keep using it. So if you establish an emergency fund as you're paying down debt, that's going to help you if something pops up. So you don't have to use your credit card again. You'll have some cash to support that. Cancel cards if you don't need them. Don't just cut them up, because that doesn't close them. Actually write a letter, talk to your credit reporting agency, and get rid of the cards that you're not using. You want to write a letter that says that it was closed at your request, so that that doesn't show negatively against you. Now, if you can't pay your bills, that's obviously a sign that you need to take control. You don't want to ignore your creditors. Call them first. Work out a plan, because that shows that you're interested in managing this. If you just disappear, we assume you just disappeared, didn't want to pay it. Stop using your credit cards and don't add new debt. I've said this before, but talk to your credit union. We have lots of solutions. We deal with this every day, and we're a great resource. And then if we can't help you, we have a great partner, Trinity Debt Management, and they will create a debt management plan. Trinity Debt Management does that by negotiating interest rates. So if you are paying, 20% on cards, they may be able to negotiate those down to 0%, 6%. It can range based on the creditor. Excuse me. Okay, so there is life after bad credit. I like to equate it to a diet. You work a long time to build that bad credit. So you just need to kind of draw a line in the sand and say, I'm going to do better going forward. So you want to pay your bills on time, get your credit report, Maybe you want to consolidate debt. That can be positive. Just understand that there are some inherent risks with it. Seek credit counseling if you need it, and opt out of credit card offers. So I know that we end up with a lot of credit card offers in our mailbox, and they can be really easy to take advantage of. But you can opt out of that to remove the temptation. Here's some resources for you. So the MyFICO site offers a lot of credit education about the FICO score and that kind of thing. Federal Trade Commission has an awesome blog. Their writer is funny and entertaining, and they take these identity theft and fraud pieces and really make them relatable to the everyday person. Our website, unitycatholiccu.org, offers financial education, debt management, all kinds of good stuff. There's the Vantage Score site, and that just explains more about your Vantage Score. And then if you're not a member of Unity Catholic, I always encourage people to join a credit union. YourMoneyFurther.com can help guide you to a credit union that works for you. There is a credit union for everyone, and maybe you're not eligible to join Unity Catholic, but there's another one out there that's going to be just right for you. I really appreciate you hanging in here and going through this Take Charge, Wise Use of Your Credit Card seminar. Thank you so much for sticking through this, and please feel free to reach out to me if you have any questions. My email address is kcreddy, REDDY, at unitycatholiccu.org. Thanks so much. You have a great day.